gonna try this recording both my video, audio, and the screen where I can talk about investment for beginners and where you should place your money to maximize your profit. All right, so here it is. Bottom line, you want to have some cash for a rainy day. You want to have, maybe 5%, to me that would be like $50,000 for, a job loss, medical bills, car that you want, whatever you need. Next thing, buy index fund with no management fees. Now, some people talk about having a replica equivalent of the S&P with individual stocks where there are no management fees at all. Today, there are really long-term investment funds, SFYX, that's SoFi ETF, and FNILX, Fidelity, zero management fees and zero expenses. Um, with about 7 to 8, 10% year-over-year earnings for a long-term investment. This strategy is endorsed by Warren Buffett for most people. Now, you say Warren Buffett, he invests in Apple 50% and strategically Coca-Cola and some other big, parts of his portfolio. For the average investor, buying index fund with no management fee, good idea. Buy some bond mutual funds with low expense ratios for steady tax-free dividends. I recommend VCITX Vanguard. Has about zero point 0.2 total expense fees, and it gives about 2 to 5% year-over-year return, along with uh, dividends, which are tax-free again. And then you can buy speculative investments, time permitting, cryptocurrencies. Love that. I mean, if you 3 months ago now, it's hard to say. Foreign markets, for instance, in companies like Neo, Tesla would have been a great buy. Now it's hard to say, and here you can buy some speculative investments. And I'll talk about a couple that I think are going to be big winners in the next upcoming year due to this corona going away with all the vaccinations eventually hitting United States and the rest of the world. And I'll have that at the bottom of the video. All right, so this how you invest depends a lot on the degree of and risk tolerance. If you are an aggressive investor, you want to put more money into large cap stocks, S&P, and then some small and basically a lot of money in your stock, and then a little bit on bonds. On the other side, conservative investor, you have a lower risk tolerance, you want to put more money in your bonds. So the volatility is lower. The time horizon is also shorter, so you can withdraw very fairly predictable of what you had invested in bonds. But on the other side, flip side, you may not be getting the return that you would see from these stocks. The last 2 years, the S&P has gone up 50%. Hard to believe after COVID. But there was a lot of volatility. Again, March was a time where stocks were tanking, and if you had sold at the time because you needed money for, say you got whatever, you needed a car, and that would have been a miss, right? So, variability and risk tolerance are important factors. All right, here are my stock picks for January 2021. These are four recovery stocks, in my opinion, that I think will are really at near, they haven't recovered yet. The 52 weeks are peak highs were very good, and now they were at the bottom. They've gone up a little bit, but they haven't recovered entirely. American Airlines, Carnival, Norwegian, United. All right, let's go to the first one. American Airlines. Although I don't really like to fly on American Airlines myself, the things that I'm looking for is the high uh, in the February timeframe around almost $30, and now 15. COVID's on its way, and really it's got a large market cap, has low PS. It's considered undervalued, but I think it's, one of these stocks that hasn't recovered yet. Like JetBlue has recovered much better, and Delta has recovered much better. American Airlines hasn't, and this is a potentially 100% return in the next 2 years. Highly encourage it. Take a look. I bought it myself. Next one, United Airlines. It's a global airlines, again with a large market cap, and it hasn't recovered from its 52-week high pre-COVID. Again, low ESPS. I think it will take a little bit of time. I would say I would give it a year, but that's a good time for it to mature out of the short-term capital gain into the long-term capital gain. And this is a very, I think it's another stock that I would recommend, and I did buy. Norwegian Cruise Line Holdings. Now, this is again in the category of travel and leisure, and that hasn't happened, a lot for most people because of this COVID travel restriction. People worried about COVID, but after this, people are just looking for some leisure, traveling around the world again, and there's a lot of pent-up demand, I think. And again, the high 52 was $59. Right now it's 52. I think it'll go back up to 50 in a year or two, and that's again the perfect time for a holding to come from a short term to a long-term capital gain. Carnival is another recovery stock I think is gonna double in the next year. Um, Unlike a lot of the other hospitality and leisure companies, this is something that hasn't really seen its recovery yet. And it has a large market cap and a pretty good potential to get the 100% return. And I again bought this. I think this is a great stock to buy. So I hope I've given you some tips. I hope you've enjoyed my tone, and I hope if you like my content, hit a subscribe, make some comments about what else I could talk to you about. All right, thank you.